Hello everyone and welcome to today's morning report. Charles Perez on Tuesday, 5th of December with me, Rich Perry, market analyst at Hantec Markets. Two main factors have been driving markets in recent days really. Brexit negotiations and tax reform. Tax reform went through on Saturday. A little bit of a sort of a slightly uncertain move really on the dollar since that decision went, since that vote in the Senate. But there's a slight air of dollar positivity coming through as Treasury picked up slightly today, nothing too significant. But it's interesting that we are seeing this move with the dollar just mildly getting a little bit of strength back. And again, testing that downtrend that we've seen recently. Sterling being the key underperformer today as the Brexit negotiations continue to drag on. No agreement with Theresa May and Jean-Claude Juncker yesterday, primarily because the DUP in Northern Ireland remains a stumbling block for Theresa May and her sort of and the path to agreement on the key Northern Ireland border, which the EU needs to see before we can move on to trade negotiations. But it's interesting that we saw a really strong intraday failure, really, I think you can call it, of the move to the upside on US equities yesterday. Wall Street opened sharply higher, but then closed basically at the day low, and the S&P 500 was actually down on the day as concerns over tech stocks came through and bit into the gains that we saw here early on, and subsequently we're seeing European markets a little bit cautious today. FTSE 100 outperforming on the weakness of sterling. That negative correlation play continues on FTSE. In terms of what we've got to look forward to today, we've got the services PMIs, and we're just about to have the UK services PMI in a bit. Nothing too significant in terms of surprises. Composite Eurozone PMIs in line with expectations broadly, and the Aussie has gained today on retail sales data. There was also the RBA giving its monetary policy decision, but retail sales beat expectations, and that helped the Aussie to outperform, or is helping the Aussie to outperform. This afternoon we've got the UK services PMI is expected to come slightly underneath last month at 55.0. International trade for the US at 130, minus 47.5 billion. And ISM non-manufacturing will be key this afternoon at 3 o'clock, 59.0. Now, my chart today is the Euro Aussie. Now, I saw the Euro Aussie just turning the corner yesterday. Bear candle on Friday sort of started the momentum in the selling pressure on Euro Aussie. Now, the better than expected Aussie retail sales have sort of extended this move to the downside, but look at all these momentum indicators. RSI at a 3-odd week low, the MACD lines crossing negatively, and the stochastics gaining traction to the downside. We've seen a breakdown below the support at 55.65, which was last week's low. That has been decisively broken, and now the market looks to be testing that 54.55 key support of the previous week's low, and it would be that the market is sort of corrective within this old uptrend, and it might now be pulling back towards that uptrend support, which comes in around 52.50 area at the moment. So there is certainly room for further correction in this, and as the momentum indicators unwind, this is a pullback within a bull trend, but still it looks to be ongoing at the moment. You can see here on the hourly chart, breakdown below 54.55 would be a key break on a near-term basis. Momentum indicators on the hourly chart, RSI failing at 50, rolling over, MACD lines crossing over below neutral. It all looks more corrective now near term, so rallies are now a chance to sell on the Aussie. You'd be looking at sort of the resistance coming in around that 55.65 area. That's an old sort of pivot line really, isn't it, on a near-term basis, so any sort of rebound towards that would be an ideal selling opportunity. And within that, I wish you good luck in your trading today, and I'll speak to you later. Thank you.